So, could a closed bank account actually come back to haunt you? Picture this. You think you've successfully broken up with your bank. You moved your money, you've moved on with your life, but then months later, you find out a forgotten $5 fee has drained your cash and completely wrecked your credit score. If you think just getting your balance down to zero automatically closes your account, you're putting yourself at some serious financial risk.
And that brings us to a terrifying reality in the financial world: the zombie account. Yeah, it's a real thing, and it's just as bad as it sounds. This is an improperly closed bank account that gets automatically resurrected. How does that even happen? Well, usually a lingering automated transaction like an old subscription or a delayed bill tries to process. The bank reopens your account to process the hit, slaps you with an overdraft fee, and suddenly you're bleeding money into an account you thought was long gone. It's a cascade of unpaid fees that can escalate into a massive collection agency nightmare. So, yes, debt accounts really can come back to bite you.
All right, let's dive into this. Welcome to this explainer on how to close a bank account the right way. Today, we're going to break down the exact steps you need to take to safely sever ties with your financial institution, leaving no loose ends, no hidden fees, and absolutely no zombie accounts. Here's our roadmap for today. 1. Why close your bank account? 2. Preparation before you close. 3. The official closing process. 4. What to do after closing. 5. Avoiding common banking mistakes. And 6. A scenario walkthrough and Q&A. Section 1. Why close your bank account? Now, you might be wondering, why can't I just leave my old account sitting empty? Well, because banks absolutely love to charge you for doing nothing. There are plenty of really valid reasons to switch banks. Maybe you're just fed up with high monthly maintenance fees eating away at your balance. Or perhaps you're moving somewhere that your current bank doesn't have any physical branches. Maybe you're just chasing better interest rates on your savings. Major life events play a part too, like splitting a joint account because of a divorce or consolidating business finances. But here is the thing. Simply abandoning an account because you aren't using it anymore is super dangerous. Inactive accounts can actually incur ongoing dormancy fees of $5 to $15 a month. That will rapidly turn a zero balance into a negative one before you even realize what's happening. Section 2. Preparation before you close. I literally cannot emphasize this enough. Preparation is absolutely the most crucial phase. Never, ever just withdraw your balance to zero and walk away. Step 1, you've got to open your new bank account first. You need a safe landing pad for your funds and a place to redirect your cash flow without any interruptions. Step 2, reroute all your automatic payments, subscriptions, and direct deposits over to that new account. And be careful here because some billers need up to 30 days of advance notice just to process your new payment info. Finally, step 3, download years of your past bank statements. Once your old account is closed, you are probably going to lose all your digital access, and banks love to charge steep fees to retrieve historical documents you might need later for taxes or audits. After you've rerouted the whole shebang, you enter what we call the hibernation phase. Basically, you stop using your old account, but you keep it open for a month or two. And this part is absolutely crucial. Leave a cash cushion, say around $200, sitting right there in the old account. This little secret cushion is what protects you from accidental overdrafts. Just in case a forgotten annual subscription hits out of nowhere or an old pending check takes weeks to clear. While you're waiting out that hibernation period, go ahead and gather your documentation. Banks operate under some pretty strict federal laws known as Know Your Customer, or KYC. To verify your identity for an official closure, especially if you have to go in person or mail a letter, you are going to need specific, original, physical documents. You'll need primary ID, like an unexpired passport or driver's license, then a secondary ID, like a signed social security card or debit card, and finally, proof of address, such as a utility bill or lease agreement issued within the last 60 days. Just a heads up, P.O. boxes generally won't cut it. Section 3. The official closing process. So, hitting a zero balance does not mean you're done. You actually have to formally execute the breakup. How you do that depends heavily on your account status and the specific bank's policies. If you've got a personal account in good standing with zero funds and no fees owed, a lot of digital and traditional banks will just let you close it online via a secure message. Easy enough. But if you still have funds remaining, or if it's a complicated setup like a joint or business account, you'll often have to handle it in person at a branch or via certified mail. Sometimes, for really high balances, they might even demand a notarized letter with wet signatures from all the authorized signers. Regardless of the method you use to close it, this right here is your golden rule. The depositor must explicitly request written confirmation of the account closure. Do not just take a customer service rep's word for it over the phone. You want to demand a confirmation letter on official bank letterhead. This is your ultimate shield against any future headaches. It's your definitive proof, and it protects you against future claims of account activity, accidental zombie reactivations, or unearned fees.
Section 4. What to do after closing.
Okay, so you might think you're totally done once the account is closed, right? Well, a little post-closure hygiene is required to fully and permanently sever those ties. First, review your final bank statement super carefully to ensure the balance is truly zero and no unauthorized transactions slipped in at the last minute. Second, watch your manna like a hawk for the next 45 days. You're looking for any unexpected bank correspondence that might indicate a zombie resurrection. Finally, and this is absolutely vital for fraud prevention, physically destroy all your old paper checks and shred those old debit cards. A thief finding an old blank check can cause you massive headaches, even if the account is technically closed. You also want to make incredibly sure you didn't leave any tiny forgotten balances behind. If you leave even a few pennies, you face something called escheatment. Yes, the state will literally just take your unclaimed funds after about 3 to 5 years of inactivity. And let me tell you, it is a massive hassle to reclaim that money from the state treasury later on. So just ensure every single penny is transferred out before you close the door. Section 5. Avoiding common banking mistakes. Now, I'd like you to meet the secret agency that becomes your absolute worst enemy if you mismanage an account. ChexSystems. While you are probably familiar with standard credit bureaus, ChexSystems is a specialized consumer reporting agency that banks use as a super strict background check. They keep meticulous records of bounced checks, unpaid negative balances, and involuntary account closures. Whenever you apply for a new checking account anywhere else, the very first thing the bank does is run your name right through ChexSystems. And if you happen to have an involuntary closure on your record, say your old bank closed your account for cause because you completely ignored a negative balance, that black mark stays on your ChexSystems report for 5 long years. That means for half a decade, you could be effectively locked out of the mainstream banking system, totally unable to open checking accounts at most major institutions. So, the crucial point is, let's bust a huge myth right now. Closing a bank account does not directly hurt your credit score. Checking and savings accounts are not credit accounts, so they aren't reported to places like Experian or Equifax. However, if you close an account with a negative balance, or you abandon it and just let those fees rack up, the bank will eventually charge off that debt and sell it to a collection agency. That collection agency absolutely will report the debt to the credit bureaus, and that will ruin your credit score for up to 7 years. Section 6, Scenario Walkthrough and Q&A. Let's move to see how this builds into a foolproof 45-day timeline. On day 1, you go ahead and open your new bank account and get it funded. By day 15, you've systematically rerouted all your auto pays, subscriptions, and employer direct deposits over to the new account. And now you just wait. You let that old account hibernate. By day 45, you verify all your old checks and transfers have officially cleared. Then you withdraw your $200 cash cushion. On day 46, your balance is a perfect 0, and you officially send your closure request, demanding that written confirmation. Follow this exact timeline, and you prevent any payments from bouncing, and you ensure your accounts never turn into zombies. All right, let's hit some FAQs. First up, can one person unilaterally close a joint bank account? Generally speaking, yes. In most cases, either account holder can close the account and walk away with whatever funds are remaining. However, here's the catch. If you just want to remove someone from a joint account without actually closing it, well, that requires explicit consent and signatures from both parties. If things are hostile between the two of you, closing it entirely and opening a brand new individual account is usually the cleaner, safer path to financial peace. Another really common question we get: are there fees for voluntarily closing an account? Direct closure fees are actually pretty rare as long as your account is in good standing. The 2 main exceptions are if you try to close a very new account, usually within its first 90 days, or if you withdraw funds from a certificate of deposit, or a CD, before its maturity date. In those specific cases, you should definitely expect to forfeit some interest or pay an early closure penalty. As we wrap up this explainer, I do need to give you this standard disclaimer. Banking processes vary by institution and region. You should always consult your specific bank or a financial advisor for personalized guidance regarding your own accounts. But I want to leave you with a thought to consider today. Look closely at the fees you're currently paying and the level of service you're getting. Is your current bank truly serving your financial needs? If the answer is no, Well, you now have the exact blueprint to take control of your financial narrative, avoid those zombie accounts, and safely move on.